Good morning, Happy New Year, and welcome to all our guests. Welcome to today's webinar, Getting Gear for the New Year. If you have any questions, please type them into the Q&A area and we will answer accordingly. Our fearless leader is unable to join us today as she is recovering from some health issues, but she wishes everyone a successful and prosperous new year filled with continued growth and new opportunities. As you all can see, today's webinar is going to be a little bit different as I'm usually behind the scenes, ensuring that everything runs smoothly. My name is Heather Gordon, Vice President and Chief Operating Officer for MGill and Associates. I've been with the company for 12 years and it has been a wonderful journey. I would like to thank our partners, Jamaica USA Chamber of Commerce, the City of Miami, Miami-Dade County International Trade Consortium, Miami-Dade Aviation, and a host of other companies whose logo is not on the screen. Today's webinar is hosted by MGill and Associates, 35-year award-winning management and economic development consulting firm. We empower communities, businesses. We empower communities and businesses for sustainable economic growth and provide consulting services to help gain access to capital, access to contracts, and access to global markets. I would like to introduce the first speaker, Director of International Trade and co-host for today's webinar, Ms. Emily McHugh. I'll go into her bio. Emily McHugh is an award-winning entrepreneur and international trade consultant with MGill and Associates, where she supports businesses in navigating the global marketplace. She also serves on the board of the Jamaica USA Chamber of Commerce, where she actively supports cross-border trade and investment initiatives. Emily is the author of The Little Girl's Guide to Entrepreneurship and the founder of the Supercharged CEO Community, an online platform designed to empower new entrepreneurs with practical tools and insights drawn from her own entrepreneurial journey. Her international career includes roles in trade finance and foreign exchange and Banque National de Paris in New York and Mexico City, as well as founding Chameleon International Inc., the parent company of Kasari, an award-winning travel accessories brand that works with global suppliers and distributors. Having lived in 6 countries and fluent in 3 languages, Emily brings a strong cultural perspective to international trade. She is also an accomplished violinist and has been featured on CBS News, including performances of the U.S. national anthem for the New York Mets. Emily holds a Bachelor's of Arts degree from Swarthmore College and a Master's of Business Administration from Columbia University. Emily, take it away.
Okay, good morning, Heather. Thank you so very kindly for that very warm and lovely introduction and for launching us off. And I join you in welcoming everyone to this wonderful Getting Gear for the New Year 2026 edition as we brace ourselves for a year ahead, a year of prosperity and good vibes and good energy that we call down from the Almighty. So that's our attitude towards this. So I'm here to really just highlight some of the services of MGill, and we all know that 2025 was a year of great transition. It goes without saying, and MGill and Associates has been resilient in that transitional phase, also kind of transitioning from our traditional services that we offered with the under the auspices of the MBDA, which were at no cost to our clients, to now focusing on our strategic consulting trade acceleration services, which our clients now contract us to provide to them. And so we want you to know that even though we may have volatile markets and a volatile marketplace, that means that there are a lot of opportunities. And when you tap into partners that are experienced, we have an extensive network, global network of partners to bring to bear to assist our clients in making that journey much more focused and much more successful, to enable you, providing you with the tools necessary to navigate the landscape ahead. So some of our services that we're focusing on now again, highlighting trade acceleration as a key focus, whether it be into new international markets or whether expanding within the United States, whether you want to expand into the Caribbean or from the Caribbean into the US or into other markets around the world, we are poised to support you in those initiatives. Some of the services include market readiness analysis, whether you're export ready, and guiding you through the process of what that means. Also providing market intelligence based on the markets you choose to or would like to investigate. Export development strategies. Business opportunity alignment. And I really want to put the stress on the word alignment because that's really the key. We want to put our resources where the best opportunities could be so we can maximize our returns. And then strategic positioning and market visibility strategies. So if any of those services could assist your business, we encourage you to reach out to us at MGill and Associates so that we can support you in that growth direction. And so at this time, I will, it gives me great delight to introduce our speaker, Ms. Michelle Colley, who, our first speaker of three coming up, Ms. Michelle Edwards Colley. She has over 30 years of banking experience and specializes in providing down payment assistance and home buyer education for first-time home buyers in the South Florida community. And she currently serves as a Senior Vice President and Director of Community Reinvestment at City National Bank of Florida. She is the president and a founding member of City National's African American Employee Resource Group, Onyx, where she proudly represents the bank's diversity and inclusion efforts. So we really applaud her for that. She's also a certified credit counselor and certified practitioner in financial capability. People, Miss Michelle is someone you want to know, someone you want to know to keep your finances together. She also facilitates workshops in budgeting, credit building, and financial literacy. Amen. So she's actively involved in numerous community organizations, and she's a graduate of FSU, Florida State University, where she earned her bachelor's in communications and holds a Master of Divinity from Asbury Theological Seminary, and she's an ordained itinerant elder in the AME Episcopal, African Methodist Episcopal Church, where she also serves as an associate minister. So she will give you scriptural literacy and financial literacy, really wonderful combination. And indeed, her passion is to help families to achieve the dream of home ownership and guiding them through every step of the process. So she's also an author, the co-author of No Glory Without a Story and a devotional for women. Her favorite quote and the creed by which she lives her life is, "Be the change you wish to see in the world." And so Ms. Michelle is married and has 3 lovely children, resides in Sunrise, Florida, and we welcome her without further ado. Thank you, Ms. Michelle.
Thank you. Thank you so much, Emily, for that introduction. I was like, who's she speaking about? So I'm excited to be here and share some information. Happy New Year to everyone. It's 2026. Can you believe it? And so we want to get in gear. And what does getting in gear for the new year means? Let's talk money. Let's talk about financing tools and access to working capital that's available for you, the small business owner and entrepreneurs that are on today's webinar. Next slide, please. Our goal today and every day at City National Bank of Florida is to empower entrepreneurs with essential financial resources. So we have small business lending, SBA lending, commercial lending to be able to assist you depending on what your needs are. And so our goal is to develop a relationship with you as a small business owner and find out exactly what you need and how we can assist you in achieving your goals for your business. The next slide, please. So today I'm going to cover a myriad of topics, but I want to discuss first and foremost the introduction and importance of capital. Of course, we all know that your business needs money, right? But let's talk a little bit about why having that capital in your business is important. Next slide, please. The importance of working capital is, of course, to make sure that you have operational stability, that your business can keep going day to day. But I always tell businesses, it's not just about the day-to-day operation, making sure you can make payroll, making sure that you can buy the goods that you need, but it's also how to grow your business. What are your future goals? So I tell people to make sure they create SMART goals, and we're going to get into that a little bit more at the on a couple slides in. But it's to support business growth as well as cash flow management for businesses. Entrepreneurs seem to face what we call systemic barriers over the years, limited credit history, maybe the lack of collateral, as well as restricted access to traditional banking services. So a lot of time entrepreneurs are faced with using credit cards or high interest loans to be able to finance their business. And so our goal is how to help you become an entrepreneur who is using the credit history that you have, how to build credit history, and be able to access traditional banking services at a lower cost. And we're going to talk about some of the various capital that's available to you, opportunities. Next slide, please. Another reason to access capital matters is, did it go to the next slide? I have it here, but okay. Economic contribution. So small businesses, especially if you're here in South Florida or in Florida in general, the majority of businesses in the South Florida area are a small business, businesses with revenue less than $1 million. And you play a key role in the local economics and job creation, right? Imagine a small cafe in a strip mall that if that cafe is not open, you're not hiring waitresses, the chef, you're not providing stability within that shopping center as far as paying the rent to that shopping center owner. So it's vital, just every small business that we have, their ability to grow and be sustainable, because it's job creation and there's a financial health that's vital to our communities. When small businesses grow, our communities grow. And there are available support resources such as the SBA, CDFIs. A CDFI is a community development financial institution. That's a designation given by the US Treasury, and those institutions have mission purpose driven. So they could be a bank, a credit union, they're a nonprofit organization that has a designation. And the reason that they have that is to be able to help small business owners and not have the same guidelines that a traditional bank does. So we're going to talk a little bit more about financing through CDFIs, as well as banks such as City National Bank of Florida have our CRA initiatives to be able to help small businesses overcome the access to capital barriers that they face, and to be able to grow sustainability and to be able to grow their businesses. And I think about a small business owner years ago that we assisted that now looks at doing franchising. So, you're able to grow and say, okay, I want to be able to franchise my business and this is how we're going to do it. But that didn't start with that didn't start just overnight. That was conversations over years. So now is the time to sit back and say, it's 2026. What do I want to do with my business? Where do I want to see my business a year from now, 3 years from now, 5 years from now? It's important to have long-term planning and then find the capital that will support that long-term planning. Next slide, please. But there are challenges, right? We mentioned that there's challenges and systemic barriers that exist for small business owners in South Florida, or even anywhere. It's not just South Florida, right? Anywhere in the country, we see small businesses that are struggling each and every day to make the ends meet, per se. So what do those challenges look like? So limited access, like I mentioned, because banks tend to have stricter credit requirements, and maybe the lack of collateral if you don't own a building, if if your business is just growing and you're trying to purchase let's say it's a food truck and you're trying to purchase the trucks and maybe expand to more locations and have several more food trucks. Those trucks can be collateral, but typically if you're only been in business for a year or two, it's harder to get traditional financing from a bank. But the other common financing challenge is the awareness of alternative funding. So that's why workshops such as this are important to attend, to find out more about SBA, the SBA micro lending program, CDFIs, and maybe grants that are available. So there are grants available through county, various government and municipalities, and nonprofit organizations, so that for you to avoid costly financing options. So I know a lot of people who um, finance their businesses through credit cards or high interest lines of credits that are available online. You can go online and apply for it, and you get it within, a day, but you're paying, 40, 50, 60% interest. And so it's costing you a lot more, your business. It's harder for you to sustain your business when you're paying that much in interest. So there's a need for education and mentorship, which is why Marie Gill's M. Gill and Associates is an important resource in the community, and as well as offering the financial literacy programs and mentorships that small business entrepreneurs need to be able to access that affordable capital. And because a lot of times small businesses operate in underserved areas, that's where you want to look at banks and have a strong financial relationship with your banker. You should be able to walk into your bank and the banker know you. You walk in and they say, "Hi, Michelle, how are you? How is your business going?" I believe in small town banking, not just being a number at the bank. So you should have a relationship with your banker so they know what your business. Take some time to sit down with you and find out more about what your business needs are. And if you're not getting that, then you need to seek out a bank like City National Bank or, some of the other small business banks in the community that you serve. If you can go to the next slide, please. So what are some of those financial solutions? How are we going to overcome those barriers? Next slide. So let's see it on mine. These eyes, 30 years in banking, my eyes are not as good as they used to be. So of course you have traditional. What are the key features of a traditional bank loan? Of course, it's more competitive rates, structured terms, but that's best for businesses with strong credit and that have been established, right? It's important for you to have a business plan. So like I mentioned, having a 1 year, 3 year, 5 years, how do you write that business plan? Maybe you already have a plan, but the pandemic caused what I call a pivot, right? You now had to shift. And you're still trying to come out of everything related to the pandemic. We're only 5 years out, and I say only real lightly because 5 years after pandemic, if your business is still here and you survived the pandemic, you deserve a pat on the back because a lot of businesses did not. And so you have shown the resilience needed. And so that's important to share that within your business plan. You have the SBA 7A loan, which is government backed. And it's a more flexible underwriting and flexible use. And that's great for small businesses needing larger capital. And then you've got the SBA micro lending. That's for startups and very small businesses. And you've got the CDFIs that I mentioned. So they're serving underserved communities, underserved small businesses. Those community development financial institutions usually have better lending terms than the bank for a startup. So they have flexible criteria and they're community focused, right? So their goal is to help those small businesses within our communities thrive. And then you've got grants, which could be non-repayable funds. There are a lot of minority-based grants that are available for minority or women-owned small business. I meant to mention women-owned earlier. So that's another vehicle that you can look at, specifically the grants that may not have to be paid back. And so not having to pay back those funds. There's some great matching programs. I know the Urban League of Broward County had a matching program. I know there's some that are being started in Miami-Dade where you put in a certain amount and then there's a 3-to-1 match to be able to help you to purchase maybe tools that you need for your small business. Next slide, please. Alternative funding options, and then we can find out a little bit more about those. So line of credit. I try to tell business owners when I speak with them that having a line of credit is one of the best opportunities for financing within your small business, because it's not a traditional loan that you're going to get, $10,000 or $20,000 and you're just going to pay back a monthly payment. With that $20,000 line of credit, you're only using and paying back whatever you use, right? But as you use it, more the funds become available to you again. So it provides flexible funding access, and interest is paid only on the amount that you use. So it's the availability of a $50,000 line of credit means, okay, I can now go out and buy goods that I need, but I'm only using a certain portion of that line. As I pay it back, those funds are available. So it's similar to a credit card, but the line of credit is specifically for your business. You can look at invoice factoring, which you would use a third party that would offset the outstanding invoices that you have to help you with cash flow. So that gives you immediate cash flow on outstanding invoices that may have a 60, 90-day pay period back to you. So that's something to look at. There's also crowdfunding and peer lending, connecting businesses with broad investors for funding options. And that's a really good way for you to take a look and see how your small business, maybe there is a larger company that you can partner with that can help you with. I tell people, picture Shark Tank, right, where the business goes in and they pitch their idea. It's similar to that, where you're getting investors for a small portion of capital, a small percentage of your business, and to be able to get you to infuse the capital that you need to grow your business and make it more sustainable. And I mentioned grants, and I always mention those because there are a lot of grants in our community that you can apply for. And it's quick funding with non-repayable funds. You just have to meet whatever the criteria is of that grant. Be careful about using cash advances on your credit card or other type of cash advances, because those might have higher interest rates, but it's definitely a way of having quick funding, but just use those with caution. So what's your action plan for, no, I'm sorry, improving access and readiness? So how do you improve your access? You need to build a strong credit profile. You need to monitor your credit reports, because although you're purchasing in your small business, or getting a line of credit or something in your small business, usually a bank or might want what we call a guarantor. So we want you as the business owner to guarantor, and so we look at guarantee that loan. And so we do look at your credit report, your personal credit report. So understand what's on your credit report, resolve any discrepancies quickly, try to maintain timely payments to establish yourself financially credible. That business plan I mentioned, develop a plan with financial projections, a market analysis, and growth strategies to attract lenders and investors. So if you're going to do that crowdfunding or investor, they want to see your business plan. How are you going to grow that business so that it's viable for them to invest in your business? Leverage the community resources, the local chamber of commerce, minority business associations such as MGill and Associates, mentorship programs for guidance and networking. There are a lot of programs out there. There are a lot of small business nonprofit organizations that will work with you. The local chamber of commerce, if you're watching here in South Florida, the Miami-Dade Chamber is awesome. I know Eric Knowles and his team are ready and available. They offer a lot of different workshops, a lot of different information so that you can learn how to grow your business, as well as connect you with other small business owners, potential clients. And then engage in financial literacy. Attend workshops such as this one to understand loan structures, to understand the programs, understand repayment obligations so that you can make the best decision for your business. So thank you for joining today, because you've taken one of these steps already to improve your access to capital. And then let's go to the last action plan for 2026. What are you going to do in 2026 that's different from last year? Number one, you joined this webinar. That's different from last year, right? To look at securing financing in this new year. But I believe in setting smart financial goals. A SMART goal is something that's specific, it's measurable, it's attainable, it's realistic, and it has a time bound. So if your goal is to grow your business and open a second location, how are you going to do that based on finances? So how much money do you need? When do you need it by? How are you going to do it? If it's fixing your credit, how are you going to do that? If it's developing business credit, applying for business line of credit, doing the research to find out about that. Apply for SBA and CDFI programs, research and apply for those funding programs that fit your business profile to access that supportive financing. and build relationship with lenders. I cannot impress upon you enough that you have to work with banks and lenders who understand small business challenges, um, such as what's available for CRA. So banks have Community Reinvestment Act. The Community Reinvestment Act of requires that we support small businesses in our community. So banks have programs that are specifically for small business owners. A lot of times it's not something that's just, you walk into the bank and they're like, hey, small business owners, we have these programs. You have to ask. So make sure that you're asking and saying, what programs do you have for small businesses specifically under your CRA, under your Community Reinvestment Act? And most banks have special programs that are available. Diversify your financial strategies. So combine traditional loans with alternative options like line of credits or grants. So don't just keep all your eggs in one basket. Similar to how people say they have to have multiple streams of income, have multiple streams of financing opportunities. So have a line of credit available so that if you get a big order and you need to order goods, you're not at that time now looking, have options available for CDFIs, for community development financial institutions. Have your bank available to contact them. Have different options available and know exactly, okay, I'm going to look at this grant because that grant has a June 1 deadline, and so I'm going to start the process now. You cannot apply for a grant that's due in June and just wake up on May 30th and say I'm going to apply. You can, but chances of you being successful and getting awarded that grant is slim to none, right? You've got to prepare. So find out about the grants, their deadlines, as well as the requirements so that you can prepare yourself for that funding source. So it's important to have diversification and look at the various options that may be available to you. And that's my plan for my recommendations for an action plan for 2026. So thank you for your time. I'm sure you might have some questions and I'm available. Thank you.
Thank you so much, Michelle. That your presentation was wonderful, awesome. The questions, we have already started to receive some questions, but we're going to leave those for the Q&A session. However, you have heard it here. You need to build relationship with your bank or bankers. There's lots of financial resources that are available out there. There are tips that were provided that you need to avoid. Tips to be capital ready and leverage the resources that are in your community. So let's move on to the next presenter. I don't know, Emily, if you had anything you wanted to say, or we could go into the next presenter.
I want to join you in saying that was a wonderful presentation, and I know we'll have a lot of questions for Michelle, so we look forward to asking her those shortly.
Wonderful. All right, so our next presenter will be Gladys Keith, a longtime partner of McGill and Associates. And I know that Miss Gill and Miss Gladys, they go way back. Right, so let me go into her bio. Gladys Keith has been an advocate for small businesses for over 24 years and is the president and owner of FSB Agency, also known as Friends of Small Businesses. She specializes in providing contract bonding services and educational assistance to help small and medium-sized businesses understand and obtain bonding. Gladys holds a Bachelor's of Arts degree in economics from the University of Miami and maintains a 220 insurance license in several southeastern states. She began her professional career at Florida Power and Light Company, where she coordinated the implementation and operation of the company's minority business expansion program. Over the past years, Gladys has dedicated her work to helping small businesses secure working capital and bonding. Her experience and long-standing commitment to small business advocacy have positioned her as the trusted resource for entrepreneurs navigating growth and contracted opportunity. Please help me welcome Gladys Keith.
Good morning, everyone. I apologize for my voice. I've been losing my voice because I've been talking a lot. So I will sound a little hoarse. Okay, I sent in this PowerPoint, which is, it just gives you an overall basic understanding of what bonding is all about. But I'm not really going to go through the PowerPoint page by page. So if you go to the next, okay, the most important thing that I want to say about this, about bonding, is it's like securing a line. It's kind of like securing a line of credit from a bank. You, a lot of people think bonding is more like insurance, but it's not really insurance. It relies basically on your credit, and the surety companies don't want to deal with any claims. So if you read what it's saying, I don't like reading my PowerPoints. So if you just read what it's telling you, the surety expects you to do the project, finish the project, and no claims involved at all. Okay? Move to the next one. Surety is a three-party agreement where the surety assures the project owner, which is referred to as an obligee, and the contractor, which is the principal, to perform the contract. That's basically what surety is involved in. Whereas insurance is just a two-party contract. If you have some kind of injury, then the insurance company will pay for it. That's the basic difference between surety and insurance. Next slide, please. In contract surety, the three main bonds are bid bonds, performance bonds, and payment bonds. On a one-on-one basis, I can go in more detail explaining this to you. I'm sure that Heather can provide this PowerPoint to you so that you can have something to read and refer to. I explain what each one is in the PowerPoint. Next slide. I want to get to the next slide because the most important thing is the requirements that you need for bonding. Basic surety bonds, when you come to me, I'm going to be asking you for these documents, 3 years of financials. And the surety companies want it to be prepared by CPAs that understand construction. A personal financial statement, references on your largest projects, bank letter of reference. The contractor's questionnaire is an interview. That's basically your interview with the surety company, where you're going to be explaining or talking a little bit about what your company is all about. A current certificate of insurance, current licenses, and a current work in progress. The main obstacles to obtaining a bond: inadequate financials, insufficient working capital, negative net worth, showing a loss in income, and too much debt. Those three areas are what I run into a lot. Size of project exceeds your work history. When you are looking at projects to go after, if the largest project you've ever done is 500,000, and you come to me and you want a $1.5 million, you want a bond for a $1.5 million project, likely you're not going to get approved for that because you're not showing experience for a job that size. When you first step into surety, the surety company kind of looks at your experience and they'll start you out at 500, then they'll double it once you've completed that job. Now you can go after $1 million projects. Then they gradually work you up until what they feel you are comfortably and can perform based on your financial stability. Everything always ties back to they're looking at your financial statements to see if you've got sufficient working capital to support whatever projects you are going after. Another area that flags is the inadequate labor resources. You have to always kind of show that you have teams in place to do whatever it is you're trying to do, that you have sufficient, sufficient working resources to do what you're trying to do. And bad credit. I have a hard time trying to secure bonding for people who have bankruptcies, foreclosures, tax liens, and judgments. So you always have to monitor your credit. Next slide. I put a few pointers in here for people to review. Excuse me. If you know, a lot of times I get contractors coming to me and they want their performance and payment bond, but they've never tried to get a bid bond for the project. They would put up a cashier's check or something to secure the project. And when they win it, then they come and they say, I need a performance and payment bond. But the most important bond when it comes to surety is the bid bond, because that is where the surety company is actually reviewing what you say you can do. They're looking at the project, and then they are assessing at that time, if you are the low bidder, then they will provide the performance and payment bond. If they give you a bid bond, they're telling you, if you are the low bidder, we will provide you the performance and payment bond because we have reviewed your account and you can do what you said you can do on this particular project. So the bid bonds are the most important ones as far as surety companies are concerned. Another few pointers here. They do look at your D&B, your Dun and Bradstreet numbers. That's your business credit. And they want that to be at least 71. And in small businesses, they want to see at least 100,000 in available working capital, minimum. That's just minimum. Okay. Now, that is just my PowerPoint. But what I wanted to really get across to small, but I apologize for my voice. I'm losing it. I wanted to really get across is the most important thing when it comes to bonding is to make sure your business entity, you have that solidly set up. You need to make sure you have either a corporation, LLC, or partnership. Sole proprietorship just will not work in the bonding arena. You're setting yourself up for big headaches because you're subject to being sued. And if you don't have a bail to cover yourself, you are the one being sued. And you definitely need to have a business bank account. The bank account needs to be in your business name, not your personal bank account. all your taxes need to be current, your personal and business taxes, they need to be current. And you need to have some in-house accounting system where when you come to me and you say you need a bond, and I tell you, can you print out a profit and loss and a balance sheet as of June 30th? You should be able to have the ability to do that so that I can show the surety company where you are at this point in time, because they are going to ask for this information. If you don't have a system in-house, you need to have access with a CPA or an accountant that's doing your accounting for you on a monthly basis. You have to keep up with what's happening financially in your business. And what I like to tell people is you need to have a team. You need to have your CPA. You need to have a banker, like Michelle says. You need to have a lawyer, especially when you're dealing in this arena. And you need to have a good insurance, because it's like the insurance side, not my bonding, but the insurance seems to be compounding or becoming more and more insurance products that you're going to need to even start the job, more so than just having a performance and payment bond. And you also need to have a good surety agent as well. There are programs out there for small businesses and companies that have not been in business for a long time, and they just rely on credit. You need to have at least a minimum of 650. It started out saying 650. Now it's going up. I notice on a lot of my surety companies, they're looking for 700 credit scores now for their credit only program. They've increased it from 500 to 750. So they're increasing the credit score requirement. So now you can get a bond under 750 if you've got a 700, at least a 700 credit score. But I don't recommend that you stay in these programs because they're expensive. It's a good way to get started, get your first bond, but you need to be establishing a relationship with the banker. You need to get a CPA and start putting together the documents that I listed before so that I can set you up with a surety company where your bond premiums won't be so expensive that it kind of like knocks you out of the running, so to speak, because a lot of the primes or even the governmental entities, they don't like paying high bond premiums. So you're kind of like putting yourself in a awkward position. You may be the low bidder, but your bond costs 3%. So they don't like seeing high bond premiums. Let me see what else. That should cover everything that I have to say. If you have any questions, I'll be here. That's it for me.
Thank you, Ms. Gladys. Thank you so much. Emily?
Yes, excellent. Very, very important points on bonds, and we definitely will have questions for you as well, Ms. Gladys, as well in a moment. But we're going to move on right now to our next presenter, Mrs. Janet Davis, a longtime friend of M. Gill and Associates as well. And Janet Bingham Davis, she's a certified public accountant with over 30 years of experience in accounting, tax planning, and financial consulting. And she's held many executive roles in the field of finance, fiscal management, risk management, and corporate strategy, and so on. And she has a very strong understanding of business operations and capital management, which goes hand in hand with the points mentioned by earlier presenters, which it's important for businesses to have that foundation. She's also a financial advisor and has been one for the past 11 years, where she provides comprehensive financial solutions that integrate financial planning, investment strategies with sound tax planning. That triumvirate right there. So beyond her professional experience, she is deeply committed to her community, very active in several local nonprofit organizations, as well as being on the board of the Jamaica USA Chamber of Commerce. And because of her depth of experience, which includes banking, accounting, and financial planning, she's able to deliver a holistic financial foundation, financial advice to individuals, families, and businesses. So a very comprehensive approach to finance. So whether assisting with retirement planning, wealth management, tax compliance, or business advisory services, Ms. Janet is committed to helping her clients build, manage, and preserve wealth while navigating the complexities of today's financial landscape. I think we all could use a Janet in our life, and we look forward to how she will bring all those points to bear for us today as we get in gear for 2026. Welcome, Ms. Janet Davis. Are you unmuted?
Yes, I'm here.
Oh, okay, wonderful.
Thank you, Emily, for that great introduction. Did you get my slides? No? Okay, can I share? Okay, so, well, today I wanted to talk to you about the highlights of the one big, beautiful bill. This is the comprehensive tax reform that was done last year, which is called, shortened and called the OBBBA. Most of the expiring tax provisions that were expired in 25, this bill has extended them and has created some new opportunities and also some new limitations. The individual tax benefit. The Act simplifies compliance, enhances family deductions, credits, and offers new tax-deferred savings opportunities for children. OBBA makes 100% bonus depreciation permanent and restores immediate expensing for R&D costs to promote growth. Some of the individual tax changes. Permanent lower tax rates. OBBA permanently extended lower tax rates and expanded brackets from TCJA, which is the Tax Cuts and Jobs Act of 2017, benefiting most taxpayers with reduced rates. Increased standard deduction. The standard deduction is increased and indexed for inflation, providing upfront tax relief to filers. There's an enhanced child tax credit, which is being raised to $2,200 per child, and indexed for inflation with stricter eligibility requirements. The SALT deduction has been raised from $40,000 to $40,000 for 2025. SALT is the state and local taxes that was reduced on where you couldn't do more than $10,000. Now it has increased for $40,000 for 2025. The one issue with most of these is that they are term limited. Some of them are 2 years, some are 3 years. Then we are back to square one. Target relief and new opportunities. Taxpayer income deductions. The OBBA offers deductions for tips up to $25,000 and overtime pay up to $12,500, benefiting non-itemizers and phasing out for high earners. Car loan interest deduction. Interest in car loans is back, but they're major limitations on the income. So if you have a purchase of vehicles assembled in the US, you can deduct up to $10,000 annually and up to until 2028 with income limits and reporting rules. There's an expanded family tax credit. Families gain expanded credits for child and dependent care, partly refundable, adoption credits, and support for scholarship contributions. Tax deferred savings, new tax deferred accounts for children, federal contributions, and expanded 529 eligibility for K-12 and the post-secondary education. Next, we have business tax provisions. And the business highlights are the permanent bonus depreciation. This act makes 100% bonus depreciation permanent, enabling full expensing of qualified property costs immediately. There are increased Section 179 limits. Section 179 expense limits are doubled, allowing small businesses more flexibility for equipment deductions. R&D expense restoration, immediately expensing for research and development costs is restored, encouraging innovation and faster tax benefits. Enhanced QBI deduction, that the qualified business income deduction is enhanced with higher thresholds and guaranteed minimums for active businesses. There's energy compliance and other changes. The sunset of the clean energy credits. So OBBA accelerates expiration of clean energy credits for vehicles, homes, and buildings by 2025 or 2026. There's compliance reporting changes. Higher reporting thresholds for tax forms 1099 MIS, 1099 NEC, 1099K, reduced burdens for small transactions. There's stricter enforcement measures, new penalties, and larger assessment periods target improper COVID-related employee retention and credit claims. Disaster filing relief. IRS can postpone tax deadlines for state-declared disasters, extending reliefs up to 120 days. There's some significant changes in the OBA and why it matters. The OBBA provides certainty by making key tax provisions permanent, allowing confident future financial planning. Individual tax release, enhanced credits and deductions offer meaningful financial relief and encourage savings for working families. Business investment incentives, permanent expensing, and expanded deductions drive business innovation and economic growth. Compliance relief, simplified compliance and disaster relief reduce burdens and support taxpayers during difficult times. Now there's one, the social, I didn't mention that, Social Security, there's a new $6,000 credit for if you're over 65 years of age. However, it's capped, your income is capped at $75,000 for single filers and $150,000 for joint married filing jointly. So these are some of the highlights that have come up in the new bill. And if anyone has any questions for me after, then I'm be happy to answer them. And with that, I'm finished with the highlights of the bill.
Yeah. Thank you so much, Janet. We definitely appreciate that. That's quite the checklist, which I will just start with you for the first question. Like, do you have a checklist of that list you just reeled off? Because I couldn't keep up with it. I couldn't keep up.
I can send you a checklist.
Or we need, you know, the higher powers of our CPAs to kind of guide us through that. But so would you say that there are more benefits than pros and cons? I mean, when it comes to business owners, and just in a nutshell, like to just understand.
There are pros and cons because there's a lot of limitations in the bill that, while there are some good things there, if you're at the lower income level, you'll benefit more. But as 75,000 is not high. high income. So a lot of the stuff are cut off by virtue of the income level, and then they're putting some greater restrictions on getting some of the benefits that are there.
Okay. So can I just before we move on to some more questions, there's one more question for you, Janet. As far as business owners, as they launch into a new year, what would you say are the top 3 tips you would recommend that people put in place or make sure they do it so that by the time the year ends, they have those things in place? Or what are like things we tend to forget not to do? Like top 3 things that you would just recommend?
So my first thing I'll say is proper books and records, because I see so many people, they show up at the end of the year and they don't have proper books and records. Get a software. If you're going to be a business owner, invest in a piece of software. So where you can actually download the stuff from your bank into the software, so you don't lose any of your deductions. And it makes life easier when you go to an accountant, because they can track your stuff. And if you're not capable of managing a piece of software, then get yourself an accountant who can help you. Right? So that's the biggest problem most businesses have. They do not maintain proper books and records, and then they don't have the documentation to back it up, the stuff that they do. So they turn up later on and you find out, okay, sometimes it's like the next year you might find, oh, that they did buy a piece of equipment, which they've lost their depreciation on, I mean, for that year, because of the fact that it was not, they were provided to, the accountant. Oops, where did I go?
Yes. Very good.
Okay.
Thank you. Yes, thank you very much for that. Very, very helpful. Heather, you were going to say something?
No, I was just gonna say yes, that's great. So we're gonna move right along into the Q&A session. You've already started to ask the Davis questions. So this question is for Michelle, and it says, are there any entry-level banking products that help startups build credibility with lenders? You could mention, Michelle.
Yes, there are definitely programs such as City National Bank. We have a line of credit that's specifically for small business owners that have only been in business for 12 months. So as long as you've been in business for 12 months and you have at least a 650 credit score personally, then we have a $10,000 line of credit that's available. So you can reach out to City National Bank of Florida, one of our bankers, or if you can, I don't know if my contact information will be shared, Heather.
Yes, we can share it with the attendees. Yes, we can definitely.
Yes, so that way we can connect you with one of the banking centers that's closest to you. But that's just one product, but a lot of banks offer those type of products. I also mentioned as far as the CDFI, so you can build credit. A community development financial institution is not necessarily only a nonprofit organization, but there are some credit unions that are CDFIs. For example, in South Florida, we have Self-Help Credit Union, which is a CDFI. So they have products that can possibly assist you, mission-driven products, and then you're still with a bank per se. So, but a lot of the local community banks, and I can only speak for what City National offers, but most of your banks will have some type of product for entry-level small business owner.
Okay, wonderful. Emily?
Yes. Well, following on with Michelle, what are some of the tips that you would recommend to develop or cultivate a healthy DNB score versus your own personal credit, and making the distinction to build a business credit versus personal credit?
That's a great question. So, and it goes back to working with mentors and working with, small business partners to make sure that whatever financing you are getting is being reported directly to the Better Business Bureau to create your score. For example, I believe, and I don't want to quote, but I'm just thinking of a CDFI, and I want to say that Florida Community Loan Fund um, can help with that, or even Axion. There are a lot of Capital Good Fund, Ascendus. There are a lot of small business geared, and there's a way to search. So you guys, let me tell you, AI is, if you're not using or you're too scared to put anything in Chat GPT, you got to get over it. You can, there's a wealth of information. It's not like when I got into banking a gazillion years ago where you had to go and meet somebody at an event and actually shake hands with them and find out. You put something in Chat GPT and you get all the information you need. Um, so search, there's search engines to find out, and you can put in specifically the name, what you're looking for, the type of business you have, how long you've been in business, and you can find out the grants and as well as those programs that are available. And then you want to ask those agencies if they report to help you build it. Is that me? I'm sorry, there's feedback.
Sure what
Okay,
that is.
I don't know either, but but that should be able to assist you with creating the type of business credit that you're looking for, and keeping your records. So like Janet mentioned, keeping your records so that you can you can say, hey, I've had this loan for this time, here's my on-time payments, because sometimes you need to build your own and prove to everyone what you've been paying on time, and keeping track of your own finances.
Excellent. Wonderful. Thank you very much for that, Michelle. And following on with that topic again of finance, I want to ask Gladys, what does it mean to have too much debt? And I guess all of these questions are obviously related. One leads to the next. So yes, what does that mean or look like? You're muted, Gladys, I think.
Yeah, I was on mute. I got unmuted. The surety has all these different ratios, like the banking industry does, and they don't like seeing. They kind of like, I guess, the ratio they're looking for is 1 to 1. I'm not sure if that's the perfect one, but if you have, let's say you have 250,000 in working capital, but when they go down and look at your liabilities, you have 800,000 in loans that you are attempting to pay back. That's like almost a 3 to 1
Mm-hmm.
ratio. So they look for stuff like that because apparently to them you're not generating enough income. So you have to go out and borrow money to keep the company going. And they don't like seeing that. They want you to really be generating some revenue because they want you to build your net worth to put money back into the business. So they rather it be from revenue than from loans.
Okay, very good, very good. That's definitely helpful. And then how would you, oh, go ahead, Heather.
Sorry. So a follow-up to that, there's a question here. They want to find out, you mentioned about bankruptcy. So what would a company need to do in order to get a bond, sorry?
What do they need to do?
Yes, what would they need to do in order to get a bond? If they are, had bankruptcy, yes.
Or if they had a bankruptcy?
Mhm.
Well, no, there are some collateral, companies that will do it, but you're going to have to put up collateral.
Okay.
They will collateralize it. And it could be as high as 25% of whatever your contract is. So if your contract is 100,000, then they may require you to put up they call them letter of credits or irrevocable letter of credit, or however they set it up, but you will put $25,000 aside
Mhm.
to the surety, and they will hold that and then give you a bond for that project. When you finish that project, 90 days after you finish it, and they don't have any hiccups coming in, then you can get your collateral back.
Okay.
Okay.
Thank you, Emily. You can go.
Mhm. Very good. And how do you keep the bond rates low? Just a quick follow on that.
A lot of it has to do with your credit, your personal credit, and their experience with you. If you've been with a surety company for a couple of years and you've done like 4 or 5 bonds and you haven't had any problems, you do the project, you close it out, get another bond, do the project, close it out. They don't have any notices of non-payment or any issues. And I am able to negotiate the rate down. Say I start you out at a flat 2%. The next time, after like maybe 3, I can say, okay, they've been very good, so can we get 1.5? I'm the one that actually is the one negotiating it, getting it down for the contractor, if the contractor is doing an excellent job of getting in and doing the project and getting out. The key is getting in, doing the project, get out.
Good.
And what if there's a situation where a contractor, they can't complete a bonded project?
If they can't complete the project and the prime or the owner is going after the bond, see if the contractor wins the project, starts the project, but they don't complete it, they're probably going to be defaulted by the owner or the prime, whoever owns the project. They're going to default that contractor. That's where the bond comes into play, because the surety company now will have to step in and take over that project and complete the project. That's what they're guaranteeing to the owner.
Mm.
So they will complete the project. If, say, there was 500,000 left that this contractor didn't finish, but there was still money, 500,000 left for them to go out and get another contractor to do it. 9 times out of 10, the new contractor is probably going to charge more than what's available, because you're bringing in somebody else and fixing somebody else's problem. So they will come in, finish the job. If it was only 5,000 available left on the books, and the surety company had to go over, they maybe paid the new person 50,000 more. Well, now what the surety company is going to do is file a claim on the original contractor, and he's going to have to pay the surety company the $50,000 they went over back. That's why it's not a good thing to step in here and not finish the job, which is why I always say, get in, get out, and go on to the next project. Because you will get a claim, and you aren't going to be able to get a bond with anybody else until you pay that claim, because the surety industry is very tight knit. They will blast out that this company has a claim sitting out here.
Thank you for that, Ms. Gladys. There's this other question that just came in. It says, are there any industries or sectors the City National most focused on supporting right now? That question is Michelle.
So there aren't any specific factors. We definitely focus on the small businesses that are in our local area. There are some businesses we won't finance,
Mhm.
specifically like cannabis. We're not gonna
Okay.
do that.
Right.
But but everything else, we're pretty much available to assist you.
Oh, okay.
Mhm.
Mhm.
And I can answer that if there's a specific question, they can reach out to me directly, and I can answer
Yeah.
that. Mhm.
Wonderful. And you can go ahead and share your contact details. I'll definitely share it after the presentation, but if you want to say it verbally, you can.
Sure, sure. So the best way to reach me is by email, and my email address is michelle.collie, and Michelle is with one L, Michele .collie, COLLIE, at citynational.com, and city is with a Y. A lot of people spell it with an I, and then I never get your email. So citynational.com. My cell phone number is 786-393-8646. Feel free to text me. So even if as we've been on this webinar, I've been answering some texts. So thank you for those of you that have joined. I know that there are a few of my friends and partners that are listening in. So thank you.
Yeah. Wonderful. All right. I have a question for Ms. Davis. The many small business owners are still concerned or are concerned about the FinCEN BOI form. Is it still required and who actually has to complete it?
Can you read that? Repeat that.
The many small business owners are concerned about the FinCEN BOI form. Is it still required and who actually has to complete it?
Actually, if you're a US based owner, right, and the company was formed here, no, you don't have to complete it anymore. It's primarily foreign. If you're a foreign owner or it's a foreign based company, then you have to complete it.
Thank you for that clarification. Right? I don't see any other questions on the mic.
There's one thing I wanted to say because Emily asked me a question. If you go to my website, which is jdaviscp.com, and you go to resources, you'll find lots of stuff there, tax strategies for small business owners, things that provide help and guidance. There's a wealth of resources on there, so I encourage anyone who wants to know more. And the other thing that really, for most businesses, they should do tax planning before the end of the year, not wait until the next year to do their taxes. They should be in to see their accountants, whether it be depending on the size of the business, quarterly, semi-annually, but something prior to the end of the year.
Mhm. Janet, can you repeat your website for me again, please?
It's jdaviscpa.com.
Thank you.
All right. I don't think any
Thank you
other.
very much for that. Yeah, just one more quick question, Heather, please. And this is something I know it might be more directed at Michelle, but all of the panelists might have a thought on it. What are your recommendations for building relationships with lenders? What are some of the steps business owners can take to cultivate the relationships with the lender, with the surety agents, their CPAs? What are some best practices on that?
So I would say for as far as with the lender or bank, it would be to come, make an appointment to see the banker, to see we have small business bankers, we have our market managers who are specifically like what would be an old-fashioned branch manager, but come in and share with them what your goals are. If you find that your banker does not have time to make an appointment, then that's when you start looking for a bank that does have the time and makes the time for you. So we find a lot of the banks that are on every corner, they're not willing to sit down and hear what you have to say. So that it's just that initial appointment. And sometimes when your banker knows what your goals are, then that's when they can maybe even refer you to that accountant. I believe it was Gladys who said you have to have a team. And I completely agree with that. You have to have that accountant, that attorney, your banker. And so all of those referral sources, and I call it like your circle of influence, they can refer you to other people. So maybe if you already have an accountant, you ask your accountant, hey, what's a bank that's you believe would be good for my business? and ask them to refer you to their banker. So now when I get a phone call from an accountant that we work with all the time, that we partner with, and that accountant, let's say it's Janet, and she says to me, hey, Michelle, I have somebody, you know, I want you to sit down and talk to them and see how we can guide them, because their goal is to grow their business like this. So now you're getting a warm referral. So use the resources that you have, the accountants, the attorneys. We have a lot of attorneys who refer us business, because they know that we're going to take good care of their clients. And that's what it's about. You want somebody that's willing to listen. If they're not willing to listen to you, then move on to the next person, because you want to be able to share your ideas and your growth strategies with them, and have them work with you. You need a team. Can't do this alone. No man is an island, so we have to work together.
Excellent. Thank you for that. Thank you so much. Any other thoughts on that point before we go ahead?
This is Gladys. I ditto everything Michelle said.
Well,
Yeah,
as one who has worked on both sides of the spectrum, I was a bank, I was a commercial lender, so I understand both sides of the coin. Yes, you do need that team, and also the referral. Make sure that, you know, as you're dealing with the bank, you're getting to know the people in the bank, right? Because it makes it a lot easier when you walk in and they know who you are, right? You find they'll come looking for you. You know, because every banker has goals, and by virtue of the fact that they know that you have this business, and they know who you are, they know what your goals, your desires for your business are, you will find that the bank will sometimes they'll bend over backwards for you. Yes,
yeah, I agree with that. We have goals. We have to do so many loans. And so our goal, and refer your friends, other small businesses that you know, that because a lot of times you're getting good service. Make sure that you're referring your friends to that banker, because that's one of the ways that you continue to build that relationship too. But the key is don't be scared. And I find that people are just like, you know, I believe somebody asked about, you know, if I have a bankruptcy, how do I go about a surety bond? Well, you've had a bankruptcy, the mistakes happen, but how are you rebuilding after that bankruptcy? Talk to that banker, and if they don't even know specifically, they can refer you to a nonprofit organization that helps you rebuild your credit after the bankruptcy, and make sure you're paying everything on time. And then now from there, you know, 2-3 years, don't expect instant. A lot of times, I believe we live in this microwave society where we just expect everything to be resolved and fixed in that, you know, press of a button in 1 minute. You know, you press 1 minute to warm up your food, and you think it's everything in life. Everything in life is not 1 minute press and it's done. So, and I know you know that, but it's just that we live in a society that's conditioned us to believe that we could just press a button and it moves on. So just remember that everything takes time. And so rebuilding after credit, it took you a while to make the mistakes. So it's going to take you a while to rebuild. But once you rebuild, and you know, you can move on. And what do you do during that time of rebuilding, right? How do you sustain your business during that time of rebuilding? And that's where some of these nonprofit organizations and a non-traditional lending can help, and not necessarily non-traditional lending that's using your credit cards at a high interest rate. So I want to try to impress that, because I see a lot of business owners that they just go with an easy route because they can apply right online to some type of business lending, but it's a high interest rate. And so they're still looking for that easy press the button, but not wanting to go into that nonprofit and share their business plan and create the business plan and share it and go from there. So just remember that sometimes taking that 1 minute step cost you more than a couple of months of creating that business plan and relationship. I hope that helps somebody.
Yes, most definitely. That's really wonderful advice. And I think a lot of times what tends to happen, Janet saying
I was
something?
going to say, make sure they find an accountant who does not tell them to write everything off, because you write everything off, the bank is not going to lend you their money.
Hello, somebody. That's great advice right there. If you didn't hear anything else in the hour and a half we've been on, that's it right there. Because whatever you tell Uncle Sam and the IRS is what we go with. So I have a lot of people who bring me their tax returns and they're like, yeah, but I really make more money than that. But I just did that. Okay, but that's what you told the IRS. So we have to go with what you tell the IRS. If you didn't tell them the truth, then so if you don't take anything else away, just take that away. Do not write everything off. You have to show some income in order for us to use income to qualify you.
Exactly.
Amen. A lot of pearls of wisdom, great wisdom shared today. And I guess sometimes we wait for things to go wrong before we go to our bank, before we go to our CPA. We don't have that proactive stance as you were all sharing today. And that's a great way to get in gear for the new year, is to be proactive, put the systems in place, and then you can have a smoother year ahead. So definitely thank you for that, all of you.
All right, so we're going with time. So we'll move right along to the next part of our presentation. You are free to stay or you can disconnect if you have things to do, but we will move right along.
Oh, and Heather, we need to just say Happy New Year. I know we said Happy New Year before, but Gina wrote in the chat Happy New Year, so make sure to say Happy New Year, Miss Gina Grant, and all the others who have been writing that. Thank you so much. Thank you.
Thank you so much. Yes, Happy New Year, everyone. All right, so we move right along into our upcoming events. And the first event that we have is our 18th annual Voices of Jamaica, Blacks in the Blacks Business and Cultural Extravaganza event. This will be hosted by the Jamaica USA Chamber of Commerce in collaboration with Young and Associates, Holy Family Episcopal Church, and also the Consulate General of Jamaica. Lots of cultural performances and networking, so come prepared. You never know who will be inside the room. It's going to be the last Friday in February, so it's February 27th, usually around 6, and it goes on till 9 p.m. We also have our next event in March, the 16th annual Women Need Business International Conference, Women's Conference. This will be at the Women's Conference Center. And this year, for the first time, we're hosting a gala. So we look forward to your support in helping us to continue to provide to support women entrepreneurs. WIMBY is actually an initiative of MGIL Her Foundation, which is designed to assist and pretty much to empower, educate, and provide funding support to businesses owned by women of color to assist them to succeed and scale in U.S. and global markets. So further information in regards to these events will be provided, shared with you once they become available. All right, and then we have come to the end of today's program. If you have any questions or need any assistance, please feel free to reach out to us. Our email is on the screen here. You can reach out to, send an email to marie@mgilonline.com or also admin@mgilonline.com, or call us at 786-515-0670. The presenter's information will be provided. If you did not get it, it was on the screen. Just please reach out to us and we'll get you connected. Emily, I don't know if you have anything you would like to say.
Well, just to say thank you. Thank you to everyone. Thank you to all our attendees. Thank you to our presenters, and thank you for the amazing, valuable, and implementable insights that were shared that we can put to use for our business and respective activities. We definitely appreciate this. Is a great way to launch into the year, and definitely recommend and again invite people who are planning market expansion to definitely reach out to us here at MGIL. We have, as I mentioned before, amazing partners among the ones you're seeing here and beyond. So please definitely avail yourself of our professional services to getting geared for the new year.
Yeah, so thank you everyone, and a special thank you to you, Emily. So let's get in gear, get informed, and get connected. So get in gear for the new year. Until next time.
But Heather, wait, can't leave without saying thank you to Heather officially and formally and vociferously, because Heather worked so hard behind the scenes to pull this all together. Without Heather, I don't know where we would be. So let's give her her definite props as Heather deserves it. She works above and beyond. So thank you, Heather, for making things work
Thank you,
seamlessly.
Heather.
Thank you so much. Thank you, everyone. All right. So until next time, bye for now.
Bye-bye. Thank you.
Bye-bye.
Bye-bye.
Bye.
Okay, how do I do?